Imagine two people who start their careers earning the exact same salary. 10 years later, one is trapped living paycheck to paycheck, while the other earns passive income and has the freedom to make choices without worry. Their diverging outcomes were the result of resource deployment. Their identical salaries mattered less than the choices they made after they were paid. Many people hold on to the assumption that investing requires Wall Street connections, specialized expertise, or high levels of upfront capital. But investing is broader than the stock market. An investment is simply any resource, your time, your effort, or your money, that you allocate today with the potential to yield greater value tomorrow. Because time and effort count as resources, everyone inherently possesses starting capital. The sequence to build wealth is available to anyone, starting from day one. You cannot invest money you do not have. Therefore, the prerequisite for this sequence is an investment in your own human capital. Dedicating your time to acquire high-income digital skills, like data analysis, AI tool operation, or video editing, directly increases your intrinsic value and your earning potential in the marketplace. When you buy a consumer good, like a phone, its value drops toward zero, but acquiring a new skill steps your income upward for years. Financial literacy acts as a defensive shield, while mastering taxes and budgeting permanently multiplies those retained future earnings. These internal investments in your skills and education carry little market risk, yet they serve as the engine required to fund all of your external wealth building. Once your income is secured and shielded, it must be deployed. This is where you transition to financial capital, putting your resources to work independently of your own time. The core mechanic of the stock market relies on purchasing fractional ownership stakes in a company. When you buy shares, you are buying a slice of that business's future growth. A single stock is volatile, but by zooming out to an index fund, you spread your investment across hundreds of companies, capturing the broader market's trajectory. The critical variable is time in the market. Over decades, consistency absorbs short-term volatility. To accelerate this process, you can deploy capital into building your own business. This removes the direct link between your hourly labor and your potential income. In its purest form, a successful business is an automated asset created specifically to solve a problem that people are willing to pay for. Deploying capital externally, through index funds and businesses, is the mechanism that transitions you from a wage earner to an owner, creating passive scale. This flowchart illustrates how these distinct investments interact. They operate as a sequential, interlocking machine. Skills feed into capital, education shields it, index funds multiply it, and a business scales it. These four foundational pillars are accessible to anyone, regardless of their current net worth. Once this architecture is established, there are advanced investments, such as real estate, digital assets, and high-level networking, that the wealthy use to protect and grow their resources. We will cover those in Part 2. While no investment eliminates risk, the choice to avoid investing makes financial stagnation a certainty. You have the starting capital. Make your first zero-cost investment right now. Pick up a book or start learning a high-income skill today.